Today, we're tearing into Berkshire Hathaway's absolute blockbuster Q1 2026 regulatory filing. We are looking at a monumental moment in financial history here, because this marks the very first quarter under the leadership of their brand new CEO, Greg Abel. For literally decades, we've all scrutinized every single move Berkshire makes, right? Just trying to decode the strategies of the Oracle of Omaha. But this quarter? Well, the playbook looks entirely different, and the whole financial world is absolutely buzzing about it. So we're going to unpack exactly what happened, why it happened, and most importantly, what it means for your own investments. Okay, let's dive right into this. While the legendary Warren Buffett is definitely still actively involved, he actually made the dynamic crystal clear in a recent CNBC interview, saying, "I won't make any that Greg thinks are wrong." That right there proves this portfolio is already bearing Abel's distinct, modern fingerprints. Buffett noted he's still in the office every day, and the two of them talk constantly to check in on market trends. But make no mistake, the power dynamic has fundamentally shifted. Buffett is deferring to his successor. Abel is managing the company very differently during his first year as CEO, really stepping out from the shadows and making these highly convicted independent decisions that are reshaping a multi-billion-dollar empire.
Section 3. A new era begins. The Q1 2026 13F reveal.
So a 13F is just that standard regulatory document big institutions use to disclose their U.S. equity holdings. And when you categorize this quarter's complex institutional shifts, everyday retail investors can get a really clear bird's-eye view of what's going on. In his very first quarter at the helm, Abel is signaling a massive strategic shift, moving decisively away from some of Buffett's most famous historical investment patterns. We're looking at 7 key additions. In tech, they grabbed Alphabet's Class A and C shares. Over in retail and media, they actually initiated a brand new stake in Macy's and nearly tripled their position in the New York Times. And finally, in transport and housing, they scooped up a massive position in Delta Airlines alongside Lennar Class A and B shares. It's just a fascinating mix of future-focused growth and classic beaten-down value.
Section 4. The Big Tech Pivot. Embracing the future. And that tech edition? That builds into the single biggest surprise of the entire filing. A massive pivot into tech stocks. Historically, this is an area Warren Buffett famously avoided, simply because he felt he couldn't predict the long-term winners. He always stuck to what he knew. But Greg Abel, he's operating with a completely different lens. He increased Berkshire's stake in Alphabet's Class A shares by a staggering 204%. He also initiated a brand new position in their Class C shares. To put that into perspective, by the end of March, Berkshire held nearly 58 million shares of Alphabet, worth roughly $17 billion. Just 3 months prior, they held a tiny fraction of that. This isn't just dipping a toe in the water, folks. This is a literal cannonball into the deep end of the tech sector.
And when you compare their philosophies, you see exactly how their strategies differ. Buffett historically steered clear of tech because, the innovation cycles were just too fast and unpredictable for his liking. But Abel, he's prioritizing AI hyperscalers as highly profitable long-term opportunities. He's looking at Alphabet's leadership in artificial intelligence with Google Gemini, their incredibly fast-growing cloud business, and their autonomous ride-hailing technology, Waymo. Abel literally views this technological infrastructure as the modern moat, that impenetrable competitive advantage that Buffett always looks for in a traditional business, just translated for the 21st century.
Section 5. The airline industry U-turn. Returning to the skies.
Now, if the tech pivot was a surprise, this next move gave Wall Street absolute whiplash. We're seeing a fascinating reversal in investment strategy as Berkshire dramatically re-enters the highly volatile airline industry. They authorized the purchase of 39.8 million shares of Delta Airlines. That creates a massive $2.6 billion position that instantly makes Delta their 14th largest holding overall. For a sector that Berkshire had totally abandoned, establishing a multi-billion-dollar position right out of the gate is a profound statement by the new CEO.
Talk about philosophical whiplash. This directly contradicts Buffett's historic public criticisms of airline volatility. Back in 2008, Buffett literally joked that if a capitalist had been at Kitty Hawk, they should have shot the Wright brothers down because airlines have historically struggled so much to maintain a competitive advantage. And let's not forget, just 6 years ago, during the pandemic, Buffett surprised the market by dumping a $4 billion airline portfolio, arguing that consumer travel habits were permanently broken. Well, clearly, Abel strongly disagrees with that historical assessment. So why jump back in? Abel clearly saw a classic value play here. He swooped in to scoop up Delta stock while it was artificially suppressed by geopolitical fears. Basically, the market was panicking over rising fuel costs due to the Iran war, which severely punished airline stocks. But Abel recognized that the core business of Delta was still strong, and he used that intense market volatility to his advantage. It is a brilliant example of capitalizing on short-term fear for long-term gain.
Section 6. Cleaning House. The exit of Todd Combs.
You know, the changing of the guard isn't just about what they bought, it's heavily about what they liquidated following the departure of investment manager Todd Combs, who left for JP Morgan at the end of 2025. To cleanly sweep out the remnants of the old guard, Abel's Berkshire entirely removed signature Combs-era holdings. We are talking about a full 100% exit from massive names like Visa, MasterCard, and Amazon, as well as dumping Domino's Pizza, United Health Group, Aon, Pool Corporation, and Chartered Communications. Abel isn't just maintaining the status quo here, he is actively restructuring the portfolio to align with his own vision, totally removing those legacy bets that just don't fit his forward-looking thesis.
Section 7. Retail Investor Takeaways. What it means for you.
So what does this all mean? How should a retail investor interpret these billion-dollar institutional moves for their own personal brokerage or retirement accounts? Well, first, let's look at the market's verdict. Recent market reactions indicate massive investor confidence in Abel's new choices. Right after this portfolio disclosure went public, Delta stock jumped over 3% and Macy's popped over 1%. The market is absolutely validating Abel's strategy. Investors who used to blindly copy Buffett's trades are now showing they are more than willing to follow Abel's lead.
For small retail accounts navigating all this market volatility, the major takeaway here is balance. While Abel is aggressively pursuing tech growth, which we know can be super volatile, he anchors the portfolio with incredibly cheap traditional retail and service holdings. I mean, buying Macy's at just 9 times forward earnings, that's a classic safe value play. It grounds the risk. It shows retail investors that, hey, you can chase the AI revolution without completely abandoning fundamental valuation principles. Even when looking at Berkshire's long-held legacy stocks, everyday investors really have to choose their personal strategy. You have to ask yourself what you actually want from your money. Are you backing a stock like Apple for tech-driven capital growth as they transition into AI? Or are you looking at a stalwart like Coca-Cola for reliable, passive dividend income? Buffett's Berkshire heavily favored that Coca-Cola model of steady, predictable cash flow. But Abel's Berkshire, they seem far more comfortable navigating the growth-oriented Apple and Alphabet model.
Which leaves us with one final, absolutely crucial question. With Greg Abel confidently steering the company into the AI revolution with a massive Alphabet stake and bravely re-embracing airline volatility with Delta, the landscape has fundamentally changed. Does this modernized, aggressive investment approach still align with your own financial goals? It's a new era for Berkshire Hathaway, and you know what? It might just be time for a new era in your own portfolio. Thanks for joining me on this explainer, and keep learning.